Everybody wants the same answer right now. Is Bitcoin about to explode in 2026? Or is this just another cycle where the loudest predictions get the most clicks and everyone else gets chopped to pieces? If you've been watching crypto content lately, you've seen both extremes. One side says Bitcoin is going back to six figures and beyond.
The Bitcoin
to be $150,000 by the end of the year.
The Bitcoin superpower, the crypto capital of the world.
The other says the top is already in, the cycle is broken, and the easy money is gone. One major bank even cut its hotter forecast and still sees Bitcoin around $150,000 by the end of 2026. And the shocking truth is that both sides are missing the real story.
End of the year, it should be about $150,000, and that's the consensus of the equity analysts that cover our company and the Bitcoin industry right now.
Bitcoin's 2026 setup is not being driven by one magical price target. It is being driven by structure, by who is buying, how they are buying, what rules have changed, and whether Bitcoin is moving from a speculative asset into financial plumbing. If you understand that, you stop asking, will Bitcoin explode? And start asking, what would actually cause that move, and is it already happening? Start with where Bitcoin is now. As I'm writing this, Bitcoin is trading in the low to mid $70,000 after a rough stretch earlier this year.
As of noon Eastern, Bitcoin tried to hold on to that $70,000 level, a benchmark that it also hit last week. Over the course of the past 7 days, the flagship cryptocurrency was down more than 4%.
That alone tells you how weird this cycle has become. In earlier eras, a move like that would have crushed the narrative completely. Instead, the market is still full of debate because Bitcoin has already shown that it can trade like a macro asset, a risk asset, and a scarcity asset all at once. The old playbook says Bitcoin moves in neat 4-year cycles. Halving happens, supply gets tighter, price explodes, retail piles in, then everything crashes. That framework worked well enough when the market was smaller and more emotional, but 2026 is exposing the weakness in that model. This market is now too large, too institutional, and too connected to traditional finance for the old cycle map to explain everything. The halving still matters, scarcity still matters, but when large pools of capital can enter through regulated products, the question stops being only about new supply. It becomes about sustained demand. That is why so many 2026 predictions are all over the place. People are still trying to use a supply-only story in a market now being shaped by demand channels. And those demand channels are real. Spot Bitcoin ETFs changed the game. They didn't just make Bitcoin easier to buy, they made it legible to wealth managers, institutions, and allocators who were never going to deal with self-custody, seed phrases, and exchange risk.
ETF stands for Exchange Traded Fund, a financial product that tracks the price of an asset like gold, stocks, or Bitcoin. A Bitcoin ETF lets investors buy Bitcoin exposure through a brokerage account.
Once Bitcoin could sit inside a regulated wrapper, it stopped looking like a fringe trade and started looking like an allocatable asset. That matters more than most people realize. BlackRock's IBIT alone now holds more than $55 billion in net assets. Grayscale says global crypto ETPs have already absorbed roughly $87 billion in net inflows since the US launch wave began. That is not a meme. That is infrastructure. Now add another shift, almost nobody outside. Finance talks about accounting. For years, corporate balance sheet adoption of Bitcoin was held back by ugly accounting treatment. Companies could get punished when prices fell, but the upside was not reflected cleanly the way many CFOs wanted. Once fair value accounting entered the picture, that friction started to come down. Suddenly, Bitcoin looked less like an accounting headache and more like a strategic treasury asset. That is why 2026 could become a year of corporate acceleration, not because every company turns into MicroStrategy overnight, but because the range of acceptable behavior has changed. Bitcoin on the balance sheet no longer looks like total career suicide in the same way it once did. Which brings us to the biggest distraction in the Bitcoin conversation right now. Strategy, the company formerly known as MicroStrategy. A lot of people are treating this company like it is the Bitcoin market. It isn't. It's important. It's influential. It's the most aggressive public Bitcoin treasury in the world. But it is not the whole story. The reason Strategy dominates headlines is obvious. The company now holds roughly 738,731 Bitcoin. That number is so huge that people assume one company must be controlling the narrative. And every time it buys more, the internet acts like Michael Saylor personally turned the market on. Then when Strategy stock gets hit, people panic and start talking like Bitcoin itself is broken. That's the emotional trap. Here's the reality. Strategy can amplify narrative, volatility, and attention. But the next major Bitcoin move in 2026 is probably not going to happen because of one company. It is going to happen because the buyer base is broadening. ETFs, corporate treasuries, family offices, sovereign capital, banks exploring digital asset services, and large allocators slowly moving from curiosity to participation. That is a deeper story than one leveraged corporate treasury vehicle. And there's another factor people aren't taking seriously enough: banking integration. Once banks are allowed to custody and build services around digital assets more comfortably, the ceiling changes. Bitcoin stops being just something you buy and hold. It starts becoming something that can sit inside lending, collateral, treasury, settlement, and portfolio construction systems. That does not create overnight fireworks by itself, but it raises the long-term demand floor. This is why some bullish 2026 predictions are not as crazy as they sound. The bull case is not just number go up. The bull case is that Bitcoin is being absorbed into the machinery of mainstream finance. If that process keeps accelerating, then the next leg higher does not need retail mania to begin. Institutional rails can start the move, and don't ignore the supply story either. Grayscale expects the 20 millionth Bitcoin to be mined in March 2026. That means the network is moving closer to a world where more than 95% of total supply has already been issued. So yes, the old halving-only narrative is weaker than before, but absolute scarcity is still one of Bitcoin's strongest weapons. At the same time, let's be honest about the risks. Bitcoin is not guaranteed to explode just because the narrative sounds strong. First, liquidity. Bitcoin loves liquidity. If macro conditions tighten, real yields stay high, or markets become aggressively risk-off, Bitcoin can absolutely get hit hard, even in a structurally bullish environment. Second, ETF flows can cool. The launch phase was powerful, but markets do not move in straight lines. If inflows flatten or reverse for a while, price can stall, even if the long-term adoption trend remains intact. Third, leverage is still a danger. Every cycle produces too much leverage and too much confidence. When the market gets crowded, even bullish conditions can produce violent drops. Fourth, regulation could still surprise people. Clearer rules have helped, but 2026 is not some fantasy land where all policy risk disappears. One aggressive policy move, one tax shock, one custody problem, one major institutional blowup, and sentiment can change fast. So when someone says Bitcoin is definitely going to explode in 2026, that is not analysis. That is marketing. But when someone says Bitcoin can't explode because the old cycle is dead, that is also lazy thinking. The death of the old cycle may actually be the exact reason the next move could look different, steadier, and more institutionally driven. And this is where the shocking truth really comes in. Bitcoin may not need a dramatic blow off top to prove the bull's right. If it keeps getting embedded deeper into ETFs, balance sheets, custody platforms, and regulated capital channels, that is already a form of explosion. Not necessarily a one-month vertical candle, but an explosion in legitimacy, access, and monetary relevance. Price eventually responds to that, so what should you actually watch if you want to understand Bitcoin's real 2026 direction? Watch ETF demand. Watch corporate treasury adoption. Watch whether banks continue moving closer to crypto services. Watch whether policymakers keep reducing institutional friction. Watch whether Bitcoin holds up during macro stress instead of collapsing like a pure speculation toy. My view is simple. Bitcoin in 2026 is at the point where the story is no longer just about believers buying a revolutionary asset. It is about the financial system deciding how much room it is willing to give that asset. If that room keeps expanding, then yes, Bitcoin can make a shocking move higher. Not because hype alone demanded it, but because the pipes carrying capital into Bitcoin are getting wider. That is the part most people still don't understand. The real 2026 prediction is not just about price. It is about transition. Bitcoin is moving from outsider trade to portfolio component, from protest asset to collateral candidate, from internet obsession to institutional instrument. If that transition keeps compounding, the upside could be much bigger than the average investor expects. But it will not happen in a straight line. So is Bitcoin about to explode? Maybe, but not for the simplistic reasons people keep repeating. The better answer is this: Bitcoin is building the conditions that make a major move possible. Scarcity is still there. Demand infrastructure is stronger. Institutional access is broader. Corporate behavior is changing. And the market is learning to price Bitcoin less like a novelty and more like a strategic asset. That doesn't mean you buy blindly. It means you pay attention to the real drivers instead of getting trapped by recycled cycle talk and emotional headlines. Because the biggest mistake in markets is not being early. It is misunderstanding what game is being played. And in 2026, Bitcoin is playing a much bigger game than most people realize. If you enjoyed this breakdown and want more, original, no-hype videos that cut through the noise and focus on what actually moves markets, hit like and subscribe. And comment below with your own Bitcoin 2026 target. Are we heading back to six figures, or do you think the market shocks everyone again? I read the comments, and your take might shape the next video.